Today, we are going deep inside one of the most powerful and, frankly, one of the most important companies on the entire planet. We're going to crack open the hood, take a look at the gears, the pistons, and the fuel that makes this thing run. This is our look inside the financial engine of ASML. Okay, let's get right into it. So, just to get a sense of why we're even talking about ASML, look at this. Over the last 5 years, the whole NASDAQ Composite Index, that's up a very respectable 74%. Not bad at all. But ASML? It's up 159%. It has more than doubled the returns of the entire tech-heavy index it's a part of. So the central question we have to ask is pretty simple. How? What is the engine under the hood that is driving this kind of incredible outperformance? All right, before we get into the nuts and bolts, just a quick heads up. ASML is a European company, so every number you're going to see is in euros. And we're looking at a 5-year window here from 2020 all the way through the projections for 2025. That gives us a really solid picture of how this growth story works. To build a machine like this, you need an incredibly powerful foundation. And for a company like ASML, that foundation is just unstoppable top-line growth. It really does all start with explosive sales. And when I say explosive, I am not kidding. Just look at this. Back in 2020, ASML pulled in almost 14 billion euros. Fast forward to 2025, and that number is expected to hit almost 33 billion. That's a 133% jump in just 5 years. The company is literally more than doubling its size. That right there, that's the fuel for this entire engine. But, sales are one thing. The real magic, the part of the engine that takes all that fuel and turns it into raw power, well, that's profitability. And ASML's profit engine, it honestly looks less like a normal company and a lot more like a monopoly. Okay, what's so wild about this slide are these margin lines. The gross margin, that's what they make on their products before all the overhead, is consistently sitting above 50%. Why? Because they're the only company in the world that can make the machines that make the most advanced chips. That gives them insane pricing power. And then look at the net margin. For every single euro in sales, almost 30 cents drops straight to the bottom line as pure profit. That is just stunningly efficient.
Which, of course, leads to the obvious question. If you're making that much profit, competitors are going to be banging down your door, right? So how do they protect those incredible margins?
And here it is. This is the answer. They built a giant competitive moat made of pure innovation. Look at this. They consistently pour between 13 and 16% of their entire revenue right back into research and development. We're talking billions and billions of euros every year just to stay so far ahead that nobody else can even dream of catching up.
All of this spending, all of this efficiency, it all leads to one of the single most impressive numbers you will find in the entire business world, 70.6%.
So what is that? That's their return on invested capital, or ROIC. Think about it this way. For every single euro ASML invests back into its business, like building a new lab or a new machine, they get 70 cents back in profit every single year. A 70+% ROIC is almost unheard of, especially for a company that actually makes physical things. This is truly elite stuff. Okay, let's just hit pause for a second. If you're finding this breakdown of ASML's financial engine useful, and if it's helping you understand how this whole thing works, do me a quick favor and hit that like button. It really, really helps us out. And hey, make sure you're subscribed and drop a comment to let us know what company you want us to put under the microscope next. So we have an engine that's making a ton of money with unbelievable efficiency. The next crucial part of this whole machine is how it directs all that power. For ASML, it's all about rewarding its owners, the shareholders, and turning those paper profits into direct, real returns. And we have to be crystal clear here. This is not just paper profit. This slide says it all. ASML is a cash printing machine. Their net income consistently turns into real, actual, spendable operating cash flow. And just like their revenue, that cash flow is on track to triple in just 5 years. So what do they do with all that cash? Well, they give it right back to the owners of the company. You can see 2 main ways they do that here. The blue area, that's dividends, a really sustainable and growing cash payment. And then the green area is even bigger, share buybacks. That's where the company uses its own cash to buy its own stock right off the market. So what's the big deal with buybacks? It's actually pretty simple, and it's what you're seeing right here on this slide. As the company buys its own stock, the total number of shares out there in the world goes down.
What that means is your personal slice of the ASML pie gets a little bit bigger every single year, and you don't have to do a thing. Your ownership stake in this amazing company just increases automatically.
Okay, so we've got growth, we've got profits, and we've got shareholder returns. That's all the engine's power. But every great machine also needs safety features. And that brings us to the final component, how ASML is building a financial fortress, giving it rock-solid stability and protection if things go wrong.
And honestly, this balance scale says it all. You do not need to be an accountant to see how strong this fortress is. The company is sitting on over 16 billion euros in cash. On the other side of the scale, just a little over 4 billion in debt. They have nearly 4 times more cash than they owe. That is the literal definition of a fortress balance sheet. And these dials just confirm that the fortress is totally secure. All they're showing is pretty simple. Their debt is manageable and shrinking, their interest payments are no problem at all, and they have more than enough cash on hand to run the business day to day. This company is built to withstand pretty much any economic storm you can throw it at.
Of course, an engine this perfectly tuned is not going to come cheap. As you can see right here, the price-to-earnings ratio is over 47. That's what you would definitely call a premium price tag. But, as the slide says, that's what you pay for a company that has a near monopoly and an incredible 70% return on invested capital. The market knows quality when it sees it.
So let's zoom out and put all the pieces of this financial engine together. If you were sitting down and building the ultimate investment checklist, well, how would a company like ASML stack up?
It really boils down to these 4 pillars. First, you've got that top-line dominance with 133% revenue growth. Second, you have elite capital management, proven by that mind-blowing 70% ROIC. Third, it's a cash-generating monster with over 11 billion euros in free cash flow. And fourth, you have a guaranteed return to shareholders thanks to that constantly shrinking share count. It just checks every single box.
When you really put it all together, this is the checklist for a true financial fortress. Which brings us to our final question for you. Looking at these 4 pillars, that explosive growth, the elite efficiency, massive cash flow, and direct returns to shareholders, what other company out there do you think could actually pass this test? Let us know what you think in the comments below. Thanks for watching.